Pranam, welcome to this 8th session of my course Financial Accounting 101. In this session, we'll run through the profit and loss account of Reliance Industries Limited. So let us start the session. Before we go to the session, it'll be very critical to understand that whenever you will be downloading the annual report of any listed company, for that sake, it might have one or two sets of financial statements. So if it has two, then one would be named as the consolidated financial statements and the other would be known as the standalone financial statements. It is very critical to understand what does this two mean and what you should be referring if you want to understand the whole of the company at what it is doing. So when I say standalone statement, what it is? A standalone statement gives an insight into a single company's performance. Thus, it does not give information about company's associates and subsidiary companies. So it's just a P&L show that shows what is the performance of the company as it is on a standalone basis, not having to show what the associate or subsidiary companies of that company has done, where the money has gone through its balance sheet. Now, the other is known as the consolidated financial statements. What are they? They contain detailed information about a company's financial performance. It has insights into subsidiary companies, associate companies, and joint ventures. If one needs to assess the financial reports of larger groups, one has to review a consolidated statement only. It provides a better view of all the companies put together. So, hota kya hai that I have a company A. From that company A, I have invested huge amount of money, say, in company B. Now, when I do standalone statements, I will not consider the profit and loss made by the company B where I have made substantial amounts of investment. Whereas when I see a consolidated P&L or say balance sheet or the financial statements, I will be having a full view of my company as well as the company in which I have made substantial investments. Now, what is the difference between subsidiary companies and associate companies? When the company has over 50% stake in another company, you call it a subsidiary company. If the stake is 100%, it is known as a wholly owned subsidiary. Now, what are the reasons of having a WOS? मतलब wholly owned subsidiary का फायदा क्या है? 100% आप ही ने stake डालना है, तो उसको बनाया ही क्यों? We'll see all these things as we do it in the class in more detail. Now, and the companies are not subsidiary companies, but where you still have invested, that is where the investment is less than 50% of the stake, are known as your associate companies. For example, L&T, Larsen & Toubro owns 60.99% of Mindtree Limited. As a result, L&T is the parent company and Mindtree becomes a subsidiary company. So this is how the profit and loss statement look like of Reliance Industries Limited as on 31st March 2022. You can see over here, there is huge amount of details given. We'll go them one by one. So it starts from the income, then you have total income, then you have expenses over here. From that, we get the profit before tax, tax expenses, and profit for the year. So this whole things will go one by one as they have given in the annual report. Sorry. So first that you see over here is the revenue from operations. That means how much amount of money have you generated by doing actual business and not by something else. So this amount, you can see that we have a disaggregated revenue, wherein it is showing us how much amount of sales has came from which segment of the business. So this sale 6,96,972 crores plus the income from services 95,784 crores. So we have two revenue streams, but there are so many segments of business. Okay? Revenue stream कौन सा हुआ? दो हुआ. एक sale of goods and दूसरा है income from services. These two things, and then that sale of goods are having so many other segments. So we can say that we have over here oil to chemical business is giving us this much of sale, 4,79,083 crores. Oil and gas business is giving 4,925 crores. Retail gas giving 1,70,000 crores. Digital services are giving 12,041 crores, and so on and so forth. So at the end, totally it comes to 634 crore rupees. Okay. Now they have written over here that revenue from contracts with customers differ from the revenue as per contracted price due to factors such as tax recovered, volume rebates, discounts, hedges, etc. So it's just a thing that if you check it with the contract, there might be a difference in the contract, the actual receipt because of all these reasons. That's what they have mentioned over here. This type of bifurcation helps not only the investors but also the businessmen to understand which is the predominant revenue segment, so that because anything that goes good or bad, even with a small slight here and there, will have a bigger difference on the total amount when it happens to a major part of your revenue stream. So such segregations are good to understand. Then the other part is that they have written away other income. So this is what they say that what is other income? Other income is the income that is your non-operating income. That is the income that you have earned not by doing business but by something else. So over here we have two things given. Interest is there. Interest we have received from bank deposit, debt instruments that we have invested in, probably it can be debentures, it can be SDLs, it can be anything else. Then we have other financial assets measured at amortized cost, others. So we have interest income that comes over here as 12,529. Then they also have dividend income, that is the income that they receive from dividend in the companies where they have they have what stakes. Then we have other non-operating income 1025. Then gains on financial assets, realized gains, unrealized losses. So there are all those assets which are financial. It can be a mutual fund, it can be a share, something where they are able to trade it. So you can see over here that the amount of sales that you derive or the income that you derive from your business is 7,92,756 crores, and that's on the gross basis, from which they have received they have reduced the GST 71,122 crores. So net revenue from operations comes to 7,21,634 crores. Vis-a-vis the other income is 14,947 crores. So as a percentage of total income, other income is not that huge. It has to be so. Hence, it is known as the other income. Suppose reverse ho jaye, your other income becomes 7,21,000 odd crores and your revenue from operations becomes 14,000 crores. That means you are actually not a company that you were meant for. तुम अभी कुछ और ही धंधा कर रहे हो. Okay. So यहाँ पे this is what there is a bifurcation between of revenues from in two ways: income from operations, revenue from operations, and the other income. As we move ahead, we have the most critical part of it. Then we have over here cost of material consumed. You can find. So from the total income, now we'll be reducing the expenses. First is cost of material consumed. What is this? It is the amount of raw materials that you have used in this year for the production of goods and service. So it's then we have purchase of stock in trade. What is purchase of stock in trade? They are basically the finished goods that you have bought and sold in the current year. So this is basically about the goods that has came in and went out. And this changes in inventory that has happened. So if you remember what T-shaped, profit and loss account, वहाँ पे हम लिखते थे वो year, to opening stock and by closing stock. So basically what you're doing, you are trying to put up 2, that is on the debit side, that will be a part of my expenses, and buy on the credit is part of my income. So similarly over here, instead of doing 2 buy, what we are doing is that they write like this: changes in the inventory of finished goods, WIP, and stock in trade. So it's like this: we have changed inventories at the close. So it is the closing inventory, and we have inventory at the commencement. It is the opening inventory. So when you do the closing minus the opening inventory, what you get is the change in the inventory. Change in inventory. You can see over here that changes in inventory is negative. Why it is negative? Because you are going to do the opening stock minus the closing stock. Okay, 50,000 minus 71,658. Now this negative comes in the expense side. So you have a negative expense. That actually means what? It is a income, or it will be boosting your income side. So whenever you see that the closing stock goes up, that means your income will be shooting up. And this is a very, very critical thing, which we'll learn more in the class, how people play with this stock so as to, either increase or decrease the profits. So a stock. Then the next part is that we have there's one thing known as excise duty. These are legacy things that happen right now. Also, since it is an oil and natural gas, so there is no GST. There is excise duty on many of those products that they buy and sell. Then we have employees benefit expenses. Is very critical. This is the amount that you are spending on your team, which is important. So we have over here salaries and wages, 15,729 crores. Vis-a-vis last year it was 12,556 crores. Okay, contribution to provident funds and other things, and staff welfare expenses that are there. So in total, Reliance is spending 18,775 crore rupees on the employees, and over here last year they had spent 14,817 crore rupees on the employees. So this is very important to know that employees benefit expenses might increase as there is growth in operations of the company. No doubt, the company will take all the measures to see to it that they don't require to have more amount of workforce by having, automation, IT, and so on, so on and so forth. However, these things are going to increase, at least for now, where you require humans to do work. After this, the next critical part would be over here. After the employee cost, we have the schedule 29, which says that it is a finance cost. This is very important. It shows the amount that you are spending on the debt that you have taken. Okay. So finance cost has the biggest part is interest expenses, 13,420 crores. Interest on lease liabilities, 1018 crores. Other borrowing cost and applicable loss on foreign consolidation and translations. So when you add this, majorly is part of how you are servicing your debt. So over here, 14,584 crores is very critical. You as a owner should be able to understand how the profit and loss account and balance sheet and cash statements help you to reduce the cost of funds, at least the cost of debt. कैसे हम अपने interest cost को कम कर पाएंगे? The whole of accounting has to see to it that when it is presented to the person who is going to give us debt, then he feels that we are not that risky, so that the interest rate comes down, because it's a big sizable part of the expense that we are going to do. Now over here, you can see this star sign which says that net of interest capitalized of 4,873 crores. Now what does it mean? It means that the total interest cost in this year was not 13,420 crores, but it was 13,420 crores plus 4,873 crores, out of which you are recording only 13,420 crores in this year. The remaining capitalized interest has been transferred to the balance sheet somewhere. This is known as capitalization of the interest cost. This is very important concept, which you'll be learning more in depth in the class, how it helps you to play with the numbers and present a case that you want to present it either to the tax authorities or to the bankers or to the investors. Now this was finance cost. As we go down, we have depreciation. This is what we did. It is very critical. Then we have depreciation and amortization and depletion expenses. You can see there are three words: depreciation, amortization, and depletion. Okay, which we'll see in later. What is depreciation? Depreciation is the reduction in the value of the tangible asset. What is amortization? Amortization is the reduction in the value of a intangible asset. And what is depletion? Depletion is charged on natural resources. Like you might have a mine. So as you keep on using the mine gets depleted. So that is the part known as depreciation, amortization, and depletion expenses. Now, the very important part are the other expenses, which is 95,815 crores. Now, the other expenses are also subdivided as manufacturing expenses, land development and construction expenses. Then we have selling and distribution expenses, and we have establishment expenses, or the so we have office and admin expenses over here. We have manufacturing expenses over here, and we have selling and distribution expenses over here. You can see that the manufacturing expenses, again, there are so many heads which adds up to this much amount. Then land development expenditure is given to us. Then we also have selling and distribution expenses, which is 17,000 to 868 crores. It went from 13,000 to 17,000 crores. This continuous comparison of this year with the last year is critical, which we'll be learning more in the class. Then we have establishment expenses, where we have professional fees, network operating expenses. So all these things are put in over here. You can also use charity and donations, okay, which they have put as a part of their establishment expenses. Now we are going to understand this more in depth in the class, okay? And whether they expenses, why do you donate? Is it actually for the donation purpose? So this will be seen when we meet in the class. So right now, the objective of this video is to give you just a technical overview of how does a P&L account look like. How to read it is a separate story altogether. So when we have all these expenses, over here, I just wanted to tell you more about depreciation. Depreciation is very critical because it's basically the capital cost that you are going to recover. So capital, when I say depreciation, there are three types of depreciation that that we consider. What is the economic depreciation? It reflects the loss in the value or the earning power of the asset as it ages. It requires a nuance and will vary across even same types of assets depending on how it is used, the advent of new technology, etc. So it can happen that there is a, you buy a certain asset which in that category the new technology comes every 3 years, and say that that technology that comes new, if you don't adopt the technology, your variable cost goes up very high. So you need to change the asset if you want to be remain competitive in the market. So such is the economic depreciation, where you are trying to link it to the earning power of the asset rather than just the life of the asset. Then you have the accounting depreciation. It is schedule 2 read with section 123. It is more rule based, as we had done in that video, where we had given more in-depth analysis of depreciation. It's so accounting depreciation is more rule based. It's driven largely by aging of the assets. जितना पुराना होगा वैसे वैसे उसका depreciate होता जाएगा, with the difference often being in whether it happens uniformly over the life or be more accelerated fast. And then we have tax depreciation, which is under section 38 of the Income Tax Act. It reflects what tax authorities will allow us depreciation for the purpose of computing taxable income. Now, please remember that taxation is a tool for the government so as to stimulate the economy and do wealth distribution also. So many times there are certain assets where the government gives you accelerated depreciation benefits. So it can happen if you buy, say, pollution control equipment, they might say you can depreciate it in 1 year itself. So what you're doing is that the government is trying to tell you that boss, ये तू machine ले, इससे धुआं कम निकाल. So what is the benefit I'll give you? पूरे amount को इस बार depreciation charge कर ले, तेरा income घट जाएगा, you'll be able to save the tax. So this is how sometimes government tries to promote the use of certain assets for the well-being of the country. So once you've done depreciation, there is then so over here we have up from the total income, that is 7,36,581 crores. When you reduce all these expenses, you get the profit. You get the total expenses, then you get the profit before share of profit and loss account of associated joint venture companies. So this is standalone. ये profit कैसा है? This is that profit that you have got because due to subsidiaries and the company itself. To that you add the profit of the associate and the joint venture companies. So then we get the profit before tax over here, 84,142 crores. So over here, this is a profit before tax. So from total revenue, you remove the total of the expenses, you get 84,142 crores is a profit before tax. From PBT, you are going to pay the tax. There are two tax that you can see over here. One is the current tax, that is 3,161 crores. Other is a deferred tax, that is 13,136 crores. So what is current tax? The amount of tax paid as per the taxable income of the current year. Please remember, the account that you are seeing in the annual report is the accounting as per the Companies Act. However, the tax is charged on taxable income computed as per the Income Tax Act. So there will be two different types of incomes. One is the income as per the Companies Act. It is a commercial law. One is the income as per the Income Tax Act. Okay. There is one more thing as a deferred tax. Now, this is the name of the game when you do today's tax planning. So what is deferred tax? There are two parts to it. Part 2 is deferred tax asset, DTA, and part 2 is DTL, or the deferred tax liability. Now, what is deferred tax asset? When does it come into place? Whenever the income as per the Income Tax Act is more than the income as per the Companies Act. So income as per Income Tax Act, suppose मेरा आ रहा है 100 रुपया, but actually मेरा the commercial mind says that Companies Act says that it has 80 rupees. यहाँ पे क्या हुआ? Since I am showing 20 rupees more of income in the Income Tax Act, so I have to pay more of tax than what I was supposed to pay as the Companies Act. मतलब 20 रुपए मुझे ज़्यादा tax भरना पड़ेगा. Okay, so that 20 rupees पे जब tax भरते हैं उसको क्या बोलते हैं? Deferred tax asset. And you have deferred tax liability. It comes when the income as per Income Tax Act is less than the income as per the Companies Act. मतलब Companies Act में मेरा है ना, my income is 100 rupees. However, the Income Tax Act क्या बोलते हैं? इसका लिए 80 रुपए income है. So what you've done is that the income which you think is 100 rupees is being shown only as 80 rupees. जो 20 रुपए का difference हो गया, उस पे आपका tax बच गया because your income has gone down. So वो जो है उसको बोलते हैं deferred tax liability. मतलब आज नहीं तो कल उसको भरना है. मतलब 20 रुपए इस बार हमने नहीं बताया है, शायद वो 20 rupees हमको आगे जाके बताना पड़ेगा. Okay? But definitely deferring tax is a very good way. if you are able to defer tax, that means the cash outflow towards tax goes down. If that outflow towards tax goes down, that means you are using less amount of your funds. So you are able to save the cost of funds on that part. So deferring tax is definitely critical. And people and big companies have full tax department to plan it. They have both direct and indirect tax department. So it is very critical to understand this part. Then the last thing, again, I'm showing you this slide because it is very critical to know that everything is linked. So what is the accounting equation where we say assets are equal to liabilities plus shareholders equity? What is shareholders equity? It is contributed capital plus retained earnings. What is retained earnings? They are basically the reserves and surplus. So you do the opening retained earnings plus the net income for the period minus the dividend paid for the period will give you the closing balance of reserves surplus. What is net income for the period? It is revenue for the period minus the expense for the period. So that's what the P&L account is all about. So you last wala part, the part that you see over here, okay, that is over here. So it was a part of the accounting equation. So the whole P&L account is giving you a part of the balance sheet. So you can also say that maybe P&L account is a schedule to the balance sheet. कि भाई ये net income आया कैसे, तो उसका पूरा detail कहाँ पे मिलता है? The statement of profit and loss. So this key takeaways I also kept in the description of this video. You can read from over there. I also kept the link to the annual report of Reliance Industries Limited, in the description of the video. I hope that all these things will help you to understand more about the profit and loss account. As once you will download the annual report, you will find there is host of information that you get for a company, which is very critical to understand the company. Thank you so much for this.